I'd like to go through a few charts now on inflation, since it is such an important call. And once again, featuring Bloomberg, the Bloomberg Commodity Price Index. We are today where we were in the early 80s, in the early 90s, in the early 2000s. So by this measure, inflation has gone nowhere. And very recently, of course, the strong dollar, commodities are priced in dollars, has pushed pricing down. So again, the dollar is an anti-inflationary force. This chart, usually I show you really from 2008 forward, where the correlation between this metals to gold ratio, which is in the purple, has been very high when you map one against the other on that scale. That correlation has been very high until recently. We're taking this back to give you more perspective and to show you rarely has the metals price relative to the gold price been lower than it is now. This goes back into the 80s. And this is the period of disinflation. And typically, you see that when that line is coming down, interest rates are coming down as well, if you follow this carefully. The correlation is pretty good. And that has not happened this time. In fact, interest rates have moved in the other direction. And I think there is a lot of fear about inflation, although if you look at the breakdown of long-term interest rates, and you look at the explanation of, is it real growth, is it inflation, is it just the term structure, the longer duration. It's explained mostly by longer duration recently. But if this gauge of economic health, metals to gold, does not improve, then interest rates, we believe, will come down.